Get ready, because the crypto world is absolutely exploding with updates, and you need to know what's happening. We're diving headfirst into a news cycle that's moving at lightning speed, bringing you the absolute must-know stories that are shaping the future of digital assets. From groundbreaking institutional moves to shifts in market dynamics that could redefine everything, this is your front row seat to the revolution. Don't blink, because you won't want to miss a single second of this action-packed episode. We've got some massive developments that are set to shake things up, and we're breaking it all down for you right here, right now. First up, a major educational institution is making waves by preparing to embrace a revolutionary payment method that could change how we think about tuition forever. Get ready for the details. Then, we're diving deep into an analysis that shows Bitcoin is quietly transforming, shedding its wild reputation and evolving into something much more stable, much more institutional. Is this the moment we've all been waiting for? You bet it is. Plus, we're exploring the bold predictions and strategic cases that are painting a picture of Bitcoin's long-term ascent, with experts mapping out a path to incredible future values. And finally, we'll unpack the latest on-chain data and institutional sentiment that's fueling optimism for Bitcoin's next big leap. You don't want to miss this. Hit that subscribe button, ring the notification bell, and let's get into it. A landmark shift in education payments. The University of Hong Kong's business school is on the verge of a monumental change, preparing to accept Bitcoin for tuition fees and donations, positioning itself as a pioneer in integrating digital currencies into higher education. This bold initiative aligns with Hong Kong's strategic push to solidify its status as a global cryptocurrency hub, bolstered by the recent implementation of new regulatory frameworks. Professor Kai Hongbin, the esteemed dean of HKU's Business and Economics faculty, revealed at a recent crypto forum that the university has successfully completed all technical preparations for this integration. All the technical details have been sorted out. We will take Bitcoin and digital currencies for tuition fees and donations in the future, he announced, signaling a significant step forward for the institution. While a specific launch date has not yet been set, HKU has confirmed its active exploration of digital currency payments, underscoring its commitment to financial innovation. This announcement arrives on the heels of Hong Kong's new stablecoins ordinance, which became effective on August 1, 2025. This ordinance establishes a licensing regime for entities issuing digital currencies pegged to traditional currencies like the US dollar, creating a more regulated environment for stablecoin operations. Hong Kong currently boasts 11 licensed virtual asset trading platforms, authorized by the Securities and Futures Commission, as it vies with financial centers such as Singapore and the UAE to attract crypto businesses. The university's decision to accept Bitcoin, despite its inherent price volatility, reflects a calculated approach. Professor Kai acknowledged the risks, stating, "If we lose money, we will be losing the money of the faculty. It's okay, we can take care of it, but at least let us give it a try." This willingness to experiment is supported by local lawmaker Johnny Ng Kit Chong, who proposed an immediate conversion of Bitcoin payments to Hong Kong dollars to mitigate price fluctuation risks. NG also stressed the importance of adhering to Know Your Customer, KYC, regulations to prevent illicit activities. The forum itself drew prominent figures from the crypto industry, including Binance founder Zhao Changpeng, who expressed optimism about Hong Kong's potential as a virtual asset hub. This sentiment is echoed by the city's proposed tax exemptions for cryptocurrency gains, aimed at attracting more crypto-related businesses. While Harvard University holds Bitcoin through investment funds, HKU's move to accept it directly for tuition would set a new precedent. This development is particularly significant given the Asia-Pacific region's leading role in crypto adoption, accounting for 43% of global crypto ownership. Hong Kong's proactive regulatory stance, including the approval of spot Bitcoin and Ethereum ETFs in April 2024, further enhances its appeal to institutional investors. The university's top-tier ranking in Asia lends considerable weight to this move, potentially inspiring other educational institutions to follow suit. But is this the only major institutional shift we're seeing? Get ready, because Bitcoin's volatility is taking a surprising turn, and it might be attracting the big money. Bitcoin's volatility tames, institutional appeal soars. Bitcoin is undergoing a remarkable transformation, shedding its notorious volatility and emerging as a more stable, institutional-grade asset. JPMorgan strategists highlight that Bitcoin's annualized volatility has plummeted from around 60% at the start of 2025 to approximately 30%, a significant reduction attributed to decreased speculation and a surge in corporate holdings. This newfound stability is making Bitcoin increasingly attractive to institutional investors who previously shied away from its unpredictable price swings. The key driver behind this metamorphosis is the growing trend of corporate accumulation. As companies increasingly add Bitcoin to their balance sheets, the circulating supply available for speculative trading diminishes. This reduction in readily available supply acts as a natural price stabilizer, dampening the sharp fluctuations that once characterized the cryptocurrency. This trend is causing Bitcoin's volatility profile to converge with that of gold, a traditional safe haven asset, according to Nikolaos Panagirtsoglou, a strategist at JPMorgan. Panagirtsoglou's analysis reveals that on a volatility-adjusted basis, Bitcoin is currently undervalued compared to gold. While gold represents a significant portion of private investment portfolios, Bitcoin's market capitalization, even adjusted for its reduced volatility, suggests substantial room for growth. Specifically, Bitcoin is trading approximately $16,000 below its volatility-adjusted value relative to gold, indicating potential upside as it continues to align with gold's safe haven characteristics. This suggests that Bitcoin could potentially attract institutional investment flows comparable to those seen in the gold market. The implications of this reduced volatility are far-reaching. For institutional investors, it means a more predictable risk management framework, allowing for more confident allocation of capital. This could unlock significant investment from pension funds, endowments, and asset managers who require a degree of market stability. Beyond institutional adoption, the decreased volatility may also broaden Bitcoin's appeal to a wider range of retail investors who were previously deterred by its perceived riskiness. However, it's crucial to remember that while volatility has decreased, Bitcoin remains a dynamic asset. Investors are still advised to conduct thorough research, understand market conditions, and assess their individual risk tolerance before making any investment decisions. The convergence with gold's volatility is a significant milestone, but the cryptocurrency market remains subject to its own unique set of factors and potential disruptions. While Bitcoin is stabilizing, what does the long-term future hold? Experts are charting an ambitious course, with strategic cases pointing towards Bitcoin reaching unprecedented heights. Bitcoin's strategic ascent, a case for long-term wealth creation. Beyond its current market dynamics, a compelling strategic case is being built for Bitcoin's sustained long-term growth, with projections reaching as high as $1 million. This outlook is underpinned by a fundamental shift in perception, moving Bitcoin from a speculative digital asset to a potential store of value and a hedge against traditional financial system uncertainties. The narrative emphasizes Bitcoin's unique properties as a scarce, decentralized, and censorship-resistant asset, positioning it as a digital gold for the 21st century. The argument for Bitcoin's long-term appreciation is multifaceted, drawing on its limited supply, which is capped at 21 million coins, and the increasing difficulty of mining new ones. This inherent scarcity, coupled with growing global adoption and the ongoing development of its underlying technology, creates a powerful foundation for value appreciation. As more individuals, institutions, and even nations recognize Bitcoin's potential, demand is expected to outstrip the diminishing supply, driving prices upward over extended periods. Furthermore, the increasing acceptance of Bitcoin by major corporations and its integration into financial products like ETFs are significant indicators of its maturation. These developments not only lend legitimacy to Bitcoin, but also provide easier access for a broader investor base. The halving events, which reduce the rate at which new Bitcoins are created, have historically preceded significant bull runs, suggesting a cyclical pattern of price appreciation driven by supply shocks. Analysts point to several key factors that support the $1 million target. These include the potential for Bitcoin to capture a significant share of the global wealth market, currently dominated by assets like gold and real estate. As Bitcoin's utility as a medium of exchange and a store of value becomes more widely recognized and adopted, its market capitalization could expand exponentially. Moreover, the ongoing debasement of fiat currencies and inflationary pressures in traditional economies further enhance Bitcoin's appeal as a reliable long-term investment. The strategic case also considers the network effects of Bitcoin. As more users and developers engage with the Bitcoin ecosystem, its value and utility increase, creating a virtuous cycle. This growing network effect, combined with its robust security and decentralization, makes it resilient to external pressures and manipulation. The long-term exposure strategy suggests that investors should view Bitcoin not as a short-term trade, but as a generational asset, akin to investing in blue-chip stocks or real estate for the long haul. While the long-term outlook is bright, what's driving the immediate optimism? On-chain data and institutional sentiment are painting a bullish picture for Bitcoin's next major price surge. Bitcoin eyes $120K. On-chain strength meets institutional optimism. Bitcoin is showing strong signs of an impending rally, with analysts predicting a surge towards $120,000, driven by a powerful confluence of robust on-chain metrics and escalating institutional optimism. This forecast is supported by a deepening understanding of Bitcoin's network health and the increasing inflow of capital from major financial players, signaling a potential new phase of significant price appreciation. The on-chain data paints a picture of a healthy and growing Bitcoin network. Key indicators such as the number of active addresses, transaction volumes, and the accumulation patterns of long-term holders suggest increasing network utility and demand. When more addresses are actively transacting and holding Bitcoin for extended periods, it indicates a strong conviction among users and investors, often preceding price increases. Furthermore, the reduction in Bitcoin supply available on exchanges, as more is moved to private wallets for long-term holding, further supports the bullish narrative by reducing selling pressure. Institutional involvement is a critical catalyst for this optimistic outlook. Major financial institutions are not only increasing their direct holdings of Bitcoin, but are also launching and investing in products that provide exposure to the cryptocurrency, such as spot Bitcoin ETFs. The approval and success of these ETFs in various jurisdictions have lowered the barrier to entry for institutional investors, leading to substantial capital inflows. This institutional demand is seen as a validation of Bitcoin's potential as a legitimate asset class and a hedge against inflation, similar to gold. The convergence of these factors, strong on-chain fundamentals and robust institutional demand, creates a powerful momentum for Bitcoin. Analysts are closely watching metrics like the net unrealized profit loss, NUPL, ratio, and the Mayer multiple, which indicate periods of accumulation and potential overvaluation or undervaluation. Current readings suggest that despite recent price increases, Bitcoin may still have significant room to grow before reaching unsustainable levels. The narrative surrounding Bitcoin's role in a diversified investment portfolio is also evolving. As institutions become more comfortable with its volatility and regulatory landscape, they are allocating larger portions of their portfolios to Bitcoin. This strategic allocation is not just about speculative gains, but also about hedging against macroeconomic risks and capturing the growth potential of a nascent but rapidly maturing asset class. The market is anticipating that this sustained institutional interest, combined with the inherent scarcity of Bitcoin, will drive prices to new all-time highs. With these powerful trends at play, what's the ultimate long-term potential? Experts are charting ambitious courses, with strategic cases pointing towards Bitcoin reaching unprecedented heights. All right, that's a wrap on a packed news day. We saw Hong Kong University preparing to accept Bitcoin for tuition. Bitcoin's volatility is dropping, making it more institutional-friendly, and we've got expert analysis pointing to massive long-term growth potential for Bitcoin. Don't miss out on any of these crucial updates. If you found this information valuable, smash that like button, subscribe to Bitcoin Bulletin for daily insights, and hit the notification bell so you never miss a beat. Follow us on all social media platforms for more exclusive content and join the conversation. Your support keeps this channel going strong.